What's going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having an excellent weekend. Bitcoin, cryptocurrencies looking absolutely beautiful today. You can see right here, Bitcoin is attempting to have the breakout right now as I'm making this video. Could be a lot different by the time you're watching, but in yesterday's video, I was talking about another pump coming. We were looking for another breakout. We were putting in some form of a bullish flag, bull pennant, right? Well, it looks like the formation has actually shifted just a bit. However, we could still potentially see the Bitcoin price get all the way up to about $26,500. However, I do want to exercise some caution short term because there is actually one signal that is flashing right now, and the previous times we have seen this, it has called local tops as well as 30% pullback. So is that something we should be worried about this time, or is it just totally different, completely different ball game? We're not going to have those types of pullbacks anymore. Well, that's what I want to talk about today. I also want to discuss the fact that we have $1.5 trillion that could potentially flood Bitcoin. Yes, you heard that number correct. 1.5 trillion. Now consider the market cap of Bitcoin right now. That would skyrocket Bitcoin to honestly a price I can't even calculate right now, but it would be upwards of over $500,000 per Bitcoin. Is that actually possible? We're going to talk about that, and I also want to discuss the fact that we have had the U.S. Treasury Department officially proposing the new rule for USA crypto wallets, KYC. What does this mean? Should you be worried? FUD or not? We're going to discuss that today. And if that sounds good to you, you know what to do. If you are not subscribed, most certainly consider it. We make these videos every single day. We've been doing it for over 3 years. I have no intention on stopping. And yeah, congratulations to the hodlers. We have made it to the all-time high. What a beautiful, beautiful chart. I just love opening this chart and looking at it. But short term, let's talk about it, right? Because things could get a little bit crazy. Now, we do have CME futures closed. It is the weekend. And you can see right here, we've had multiple resistances right here at this ascending broadening wedge, and we just peaked out again. And keep in mind, these markets are closed, so it is very interesting. We'll have to see what's happening over here on spot. Now, we did break out of this triangle, and we did break out over this resistance right here. Now, the one thing that I do want to mention, and actually, let me get some of these lines out of here so you can kind of see what I'm talking about. I know it can get a little cluttered. I try to keep my, I really do try to keep my charts as simple as possible. I know a lot of people have all these crazy indicators all over the place, but essentially what I want you to look at right now is this sort of neckline that's forming right around here. Now, you are noticing that we are having a bit of a breakout, right? This to me resembles a bit of an inverse head and shoulders. Now, this is actually a bullish formation, right? So this would signal that we do have more momentum to the upside. Now, we did see the volume falling down. However, right now, actually, as I'm making this video, we are testing on the resistance. So like I said in yesterday's video, I was anticipating a breakout. We could be having that breakout right now. By the time you see the video, we could have already had the breakout, right? But having a look right here, yeah, we are continuing to the upside. Pretty much the same on all these charts, so I'm not really going to go into that too much, okay? Pretty much if you guys want to know about the analysis of what I think could happen for Bitcoin, just watch yesterday's video. I'll drop it above right there if you're interested. But here's the thing. Let's talk about what is happening right now in crypto and why Bitcoin is potentially unstoppable. Now, just for everybody who's interested, look at this chart. Shout out to crypto maniacs. If you had invested 1K 10 years ago in Google, you'd have 6,000, Facebook 9,000, Amazon 22, Netflix 34, Tesla 159, and Bitcoin $237 million. I think it's pretty much the undisputed champ at this point. Now, Weiss Ratings, okay, over here, let's talk about what they did. Actually, before we get into Weiss Ratings, let me just explain one thing, okay? These companies are shifting their focus into Bitcoin. Bitcoin is becoming an actual legitimate asset, okay? Now, I know that it's been tough going through the bear market. Look, I've been scarred myself, okay? It's very hard for me to even shift my thinking. I'm used to those wild, wild west days of crypto, right? These 30% swings every single day. But look at what these companies are doing. You have a top executive at Jefferies. Now, keep in mind, these guys are a $51 billion finance giant, and they are looking to cut out of their gold reserves of their portfolio and move it into Bitcoin. They say as Bitcoin continues to consolidate above the $20,000 range, the global head of equity at Jefferies, Christopher Wood, says the company is purchasing Bitcoin at the expense of gold. The firm, with 51 billion in assets under management, is converting some of their gold holdings into, and here's the kicker, long only portfolio for Bitcoin in US denominated pension funds. So they're not looking to short it, they're not looking to trade it. If they are long only, which means they are looking for price to the upside, okay? They say the 50% weight in physical gold bullion in the portfolio will be reduced for the first time in several years by 5 percentage points with the money invested in Bitcoin. If there's a big drawdown in Bitcoin from the current level after the historic breakout above 20,000, their intention is to add to their position. These guys will be defending the line. These whales are looking to scoop up. They're absolutely salivating at the idea of Bitcoin dipping. Don't expect Bitcoin to dip to these crazy low levels and remain there for very long. Any dip that we get moving forward, especially through the next year, is going to get bought up very quickly by these institutions, and we don't even have the retail FOMO here yet. That is the part that we need to talk about, but that's not even the crazy amount of money that can come in. Let's get back to the 1.5 trillion. Where does that number come from? Well, according to Weiss ratings analyst Juan Villaverde, Bitcoin could have a much larger upside if other companies like Jefferies begin to favor the asset equally over bonds as a hedge against inflation and economic turbulence. So let's break down the numbers. Roughly 30 trillion is sitting in government bonds. So suppose just 10% of that amount finds its way into gold and Bitcoin. And then let's say we split that number in half, right? Let's say that it equally gets distributed. So that works out to an exodus of about 3 trillion. So 1.5 trillion into gold, which would be about 15% of its market cap, around 10 trillion. But the kicker, 1.5 trillion going into Bitcoin is actually 4.5 times larger than its market cap currently. And that's just the money. If you actually understand how market caps work, it can push the price up a lot higher than even that. So if you had 1.5 trillion coming into Bitcoin, you could have a Bitcoin market cap upwards of, who knows, 4 trillion, right? Because these prices are decided on the spot exchanges. They're all based on order books, right? Really, to figure out market cap, all you do is you take the last price sold, average, which there's a lot of prices on a lot of exchanges, but let's just say there's one globally accepted average price, and you simply multiply it by the amount of coins in circulation. So yes, technically market cap is flawed, right? Not everybody would be able to sell at that price, but the overall value of one Bitcoin could skyrocket to levels that most of us can't even believe. You know, you're talking $1 million per one Bitcoin? Insane, guys. It's absolutely 100% possible. But I know, too much moon boy talk over here. Let's talk about the doom and gloom, right? Everybody wants that dirty, dirty pullback. Well, having a look over here, AMA8999 did break down that he says, looks like most of the times that Binance funding overtakes Deribit funding, we get a sideways move or a local top. It could be a retail FOMO peak signal, which means that the trading over on, these retail spot places like Binance, which is usually where retail traders trade, is overtaking it. And you can see he does point out, here's a wick right here, and we dump. Here's a big spike right here. We go on sideways for about a month, and then there's a dump. And it does seem like this could be playing out. In fact, one thing I wanted to mention was that on December 18th, the funding rate surpassed 0.1% on Bybit and other leading exchanges for the first time since the November rally to 19,000. At that time, keep in mind, when we did hit 19,000, we didn't break 20K, and we actually had a pullback all the way down to the $16,000 level. Now, granted, it didn't last that long, right? Like I said, these dips are not going to last long. They're going to get bought up. But keep in mind that these 20% to 30% pullbacks are possible. However, the question really is, are they going to last? long this time around. You know, we had seen them dip and go sideways for a while, but maybe they just might be flash crashes, right? They might just be like, you know, just overbought, quick dips, institutions step in, they buy up. So like I said in yesterday's video, the title said no, as far as dips are concerned, yeah, we might get dips, but we might not get as many dips as frequently and as long as we have gotten for Bitcoin in the past. Now, we've also seen something really big happening. In fact, Whale Alert pointed out that there was $515 million in Bitcoin moved in 2 different wallets, which is over 22,000 Bitcoins, okay? And these are being moved out of, essentially, away from wallets into cold storage. In fact, Glassnode, or sometimes to custodial solutions. But Glassnode Analytics, they reported that the amount of Bitcoin withdrawn from crypto exchanges has spiked to a new high over the past 16 months. Now the amount of Bitcoin exchange outflows totals over $80.5 million. And what I think was interesting was, where else can you move $515 million for the low price of $7.20? And honestly, they probably overpaid on that. They could have probably not had it set so high as far as the transaction goes. But the dreaded news, my friends, Mnuchin and FinCEN and their new regulations that everyone's freaking out about. So let's talk about what this means and essentially what they're looking to do, how it will affect you, and should you be worried? Well, under the advanced notice of proposed rulemaking, users who want to send cryptocurrencies from centralized exchanges to a private wallet would need to provide personal information, KYC, about the owner of the wallet to the exchange if the amount sent is greater than $10,000 in a day. The exchange would also need to submit and store records involving such transactions with total values of $10,000 in a given reporting period, or just maintain records for simply transactions over $3,000. In other words, without going into too much detail, users of centralized cryptocurrency exchanges who want to move their holdings onto their own private wallets or to someone else's would have to provide detailed personal information for transactions greater than 3,000, and exchanges would be required to report either individual or groups of transactions that add up to more than 10,000 to the Financial Crimes Enforcement Network, or in layman's terms, FinCEN. So what does this mean? Well, essentially, this just means that the US simply wants to know who is the owner of the wallet and where you're sending it to. What it also means is that, honestly, not really much is going to change. I could see a lot of these exchanges just not letting US customers trade, because why do they want to really deal with this extra hassle? And for the exchanges that are going to actually still do it, like Eric Wall broke down in pretty much the simplest form, if this proposed bill passes, your withdrawals to your non-KYC'd address will take 2 transactions instead of 1. Before you went from the exchange to the wallet address. Now you go from the exchange to your KYC wallet address, then to your wallet address. So you can still have private wallets. I'm sure a lot of people will. Most of us still will. But there'll be one wallet that all the funds will kind of have to go through, essentially. At the end of the day, this does decrease your privacy. It makes it a lot easier for these guys to trace your transactions. It's something that you'll have to deal with. I mean, there are ways around it, but if you want to use the simple solutions, if you want to use things like Coinbase, very simple to get your money in and out of crypto, well, then you'll have to go through with these KYCs. If you want to keep your privacy, then it'll be a little bit harder. But with things like decentralized finance and these exchanges that don't deal with US citizens, then ultimately it won't really be that big of a deal. And I honestly don't see it affecting cryptocurrency that much. Now, there were some opinions on it. You had incoming Wyoming Senator Cynthia Lummis revealed that she has begun to work on the rumored transaction reporting rule impacting digital currencies. And she thinks it's a poor move. Okay, she's not exactly on board. She shared that she told Secretary Mnuchin that any of the actions that are rumored could damage competition in fintech with China and Russia, while also reducing financial inclusion. And I mean, to be totally honest, yes, that's basically what's going to happen. It's simply going to just, once again, put the US behind the rest of the world who is happy to innovate while we just continue to regulate. Now, she has been a supporter of Bitcoin for quite some time, and there are a few other members of Congress as well, including Warren Davidson, Tom Emmer, Ted Budd, and Scott Perry, who recently wrote that self-hosted wallets are crucial for Bitcoin. Now, they say that the real issue is self-hosted wallets are useful for all sorts of potential blockchain applications. So the ability to move a token without an intermediary is an essential element of true blockchain. If you look at a frictionless system, part of the Bitcoin white paper that made blockchain famous and growing as a technology is the ability to do something peer-to-peer. It's a core tenet of the technology. So, at the end of the day, they're worried about, doing these illegal things, money laundering, etc. But I'm going to end today's video on this 3-part tweet from Sean Ono Lennon, who is the son of John Lennon from the Beatles. You might be familiar with them. So he went on to say, people who espouse the idea that crypto and Bitcoin are especially rife with criminality are totally insane. 99.99% repeating of crime is in US dollars. Wachovia laundered something like $378.4 billion in drug money in 2006 and paid like a 2% fine. Think about it. Don't be fooled. And people think Bitcoin isn't real money because it's digital. How do you think the Fed prints money? They type a number into a computer and press return. Think about it. And to people who say anonymity in crypto is bad, what do you think physical cash is? It's anonymous. Plus, it has zero transaction transparency. Think about it. So at the end of the day, with all of these 3 concepts combined, ultimately, it seems like they're just trying to figure out ways to pretty much get their taxes, essentially, which is really all they're in for it at the end of the day anyway. They don't want to ban it. If they can figure out a way to get taxes off of it, they will. And if they can link accounts to individuals, then they have actual money that could be traced, potentially once withdrawn for taxes. Other than that, what's the point, right? But let me know what you guys think about it below. I'm really not that worried about it. We've seen the South Korea FUD. We've seen the China FUD. And honestly, this isn't really FUD. It's just regulation. They're not looking to ban Bitcoin. They're just looking to figure out who has what and where, right? So that is it from me, guys. Hope you guys enjoy the videos, the channel. Bitcoin is having a little bit of a rejection at this point. We could still be having the breakout. Like I said, having a look over here, there is that potential chance that we are having the retail FOMO peak signal, and we could be looking for that pullback the same way when we hit 19, we went down to 6, But, that is how the charts move. They don't move in a straight line. They go up, they come down. They go up, they go down. But ultimately, when you zoom out, the trend is your friend until the end, as long as we continue to put in higher lows and higher highs on the macro. There is no reason to panic, and there's definitely much more opportunity ahead. And if you play your cards right, the next year could be one of the most life-changing opportunities for anyone who's watching right now. And that being said, I want to say thank you so much for coming back to the channel. You guys rock. You're the reason that I do this every single day. Get subscribed if you haven't. Check the links in the description below. Lots of opportunities for all these different trading platforms. There's always different deals going on. Obviously, they do work with some of the, influencers to offer better deals. So by using the links below, you are helping to support the channel clearly, but you guys also do get extra bonuses as well. So check it out. But honestly, at the end of the day, if you're new, don't even consider trading. Just hodl, dollar cost average. That has been the proven method, and that is the way to go. That is it for me. My name is K-Dub. This is CryptoZombie. Until next time, stay crypto, and of course, peace out.